Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market Update, Tech and Software. This video presents a direct informational narration of the source document. As of late June 2026, tech and software market dynamics present mixed signals across major indices, with the Nasdaq trending upward while the Russell Index trends downward. The sudden intraday declines and rapid recoveries across the board are attributed to month-end rebalancing rather than company-specific news. Institutions and funds are mechanically adjusting portfolios for the second half of the year, a process that temporarily decouples price movements from fundamental catalysts.
Market participation currently exhibits severe fragmentation. The one-year rolling correlation between the average equal-weight index stock and the broader S&P 500 has dropped to a historic low of 79, compared to an average of 96. This indicates that capital is sequentially rotating through specific microtrends, moving from GPUs to power infrastructure, data centers, CPUs, and currently into memory components, rather than the market moving as a single entity.
On the supply side, South Korean technology companies Samsung and SK Hynix are executing an $880 billion private investment plan. This initiative involves constructing 4 new fabrication plants to double total production capacity between 2026 and 2030. While this addresses the long-term structural shortage of memory chips, it explicitly does not resolve the immediate supply constraints observed in the current fiscal year. From Micron, consensus estimates for earnings per share reflect an accelerated growth trajectory. Analysts forecast an EPS of $64 for the August 2026 period. This consensus estimate then rises significantly to $124 for the August 2027 fiscal year, indicating expectations of explosive fundamental growth over the next 2 fiscal periods based on industry forecasting. Regarding the forward pricing horizon, the market's standard 6 to 12-month forward pricing mechanism is chronologically shifting past 2026. Investors are anchoring the current valuation directly to the peak growth anticipated for the August 2027 fiscal year. This forward-looking valuation occurs because the 2026 calendar year ends before the projected peak, and early models indicate growth will flatten or slightly decline by 2028. Micron stock price currently features clearly defined technical support levels. Support bands are identified at 101.2 to 108.5, an intermediate floor at 88.1 to 96.3, and structural support between 77.8 and 81.3. There are 3 medium resistance levels above the current price, however, models suggest limited overhead pressure once those levels are surpassed. Assessing Broadcom's valuation scenarios, the stock is currently trading at a premium with a 30 to 40 times forward price-to-earnings ratio, driven by aggressive future growth assumptions. If growth decelerates, a 30% mean reversion scenario could reduce the valuation to a 20 times multiple, placing it near the $500 level. Currently, overlapping technical and fundamental support establishes a safety net between the 324 and 365 levels. A severe valuation divergence is observed in a second referenced chip stock, which is currently trading at 277. This exceeds its absolute theoretical upper limit of a 40 times PE ratio, positioned at 215. A break below the immediate support band of 254 to 271 exposes downside risk to the 210 structural support level, representing a potential 15% contraction toward fundamental value. In the space sector, SPCX faces competing liquidity dynamics. On July 7th, inclusion in the Nasdaq 100 mandates approximately $20 billion in passive index fund inflows, alongside reported executive-level acquisition talks with CHTR. Conversely, this passive inflow must absorb heavy trapped overhead supply from earlier investors. Furthermore, institutional models suggest fair value remains below the $100 threshold once the insider lockup period expires in December. Rocket Lab, or RKLB, recorded a 15.93% surge following its $54 million acquisition of IRPM. This price action reclaimed a crucial technical support level at $90.02, occurring after a precise bounce off the 200-day moving average trend line at the $80 level. Current models target upcoming supply zones in the 104 to 112 and 124 to 133 ranges. Google registered a 4.96% gain on its first day of inclusion in the Dow Jones Industrial Average. This movement was driven by passive index fund rebalancing at month-end, which effectively erased the 2.19% drop from the previous week. This price action reflects structural liquidity and rebalancing dynamics rather than immediate changes to underlying fundamentals.
Tesla's trading range has sharply compressed into a $50 band. The stock is bounded by a strict resistance zone starting between 419 and 428, extending to 465, against a well-defended lower support boundary between 368 and 370. This historical volatility compression indicates the probability of an impending directional breakout.
Institutional positioning reveals a stark contrast between software and semiconductors. The IGV software ETF shows historically high short interest, though this data operates on a 2-week lag. In contrast, the SMH semiconductor ETF reflects heavily long positioning with virtually no short interest. This indicates institutional participants are utilizing paired strategies, effectively shorting software while remaining heavily long on semiconductors. For the IGV software ETF, a strict technical parameter remains in focus. The asset continues in a steep downtrend. However, a clean breakout past the 9450 level is required to confirm a high probability short squeeze. Due to limited intermediate resistance, surpassing this threshold targets a move toward the 101 resistance level. Regarding the operational schedule, content releases will shift to a 5 to 6 a.m. Eastern Standard Time window over the next 3 to 4 weeks, while dedicated member content continues on its normal schedule. The World Cup knockout stages also continue during this period. The ongoing capital rotation out of software and into semiconductor narratives remains a key market dynamic for observation.